Hey traders, checking into the stock market today. Short squeeze out there for fundamental bears that were hoping for some help on the FOMC or tech earnings reactions. We'll see where we stand on the charts as bulls keep their short-term control. So as we've noted over the last day or two, I guess yesterday, talking about how daily bull flags were certainly still on the table, and we're now seeing them confirm in some places. Some other places have not confirmed them yet. So if we're full steam ahead for the bulls, we want to see all of our major sectors breaking to daily higher highs. Right now it's IWM, S&P 500, and we still have resistance on the financial sector in the NASDAQ, which we will look at here. Still a couple more earnings reactions to go for the tech sector tomorrow, and GDP numbers on Thursday to get all these fundamentals out of the way. And at this point in time, I've had a bear lean the past few days with my day trading during the daily consolidation. And I am certainly back to having a bull lean with my day trading as long as we are in daily and hourly uptrends. So S&P 500, daily higher low set, EMA 12 support hold, and that's our new benchmark level. The simple statement for me is if 389.95 is support on SPY, the bulls have full control still. If I'm a bear, I'm really hoping for a red day tomorrow to keep the possibility alive for a rising wedge, because a bull break straight into daily consolidation would show us a lack of follow through. And that is something that a bear is hoping for. But we've got a whole bunch of space for an hourly higher low to form next time we consolidate. We formed an hourly bull flag midday, and then of course the bullish FOMC reaction. So essentially we had the bullish reaction to earnings overnight, and that picked up steam a little bit. So pre-market, we were starting the morning strong. So headed into the morning saying, all right, are we going to see hourly consolidation before the FOMC? And the answer was no. I did get a short on the biotech sector that worked out for a small win, but essentially just patiently watched. I didn't do a whole lot today. And in hindsight, obviously it's easier in hindsight, but I should have been more aggressive bullish for a number of reasons. I mean, this is the ideal scenario. If you go back to a video last week, I forget which one it was, but I said the ideal scenario for a bull would be a few days of daily consolidation from here. This is when we had not started daily consolidation yet. And then a bullish reaction to the FOMC, because we knew that that would sucker in a whole new wave of bears entering positions for multiple days and then quickly being put underwater. So that in combination with, I'm heading into the FOMC reaction and I'm thinking, man, if I'm a bear right now, I am not comfortable at all. Because even if it's a bearish reaction, we're just looking for an hourly higher low compared to yesterday's low of the day. So the table was set for a short squeeze, and I didn't take advantage of that enough. And so that is my hindsight takeaway. But it was almost like I just shut off my brain and said, well, I'm just not going to trade a whole lot on the FOMC. Whereas if I were a bit more aggressive and open-minded, I would have been a bit more prepared to take advantage of that bull move. The FOMC reaction was we established a range, and it was very minimal, boring reaction. It's always when Powell starts speaking, unless the rate raise is something that the market is not expecting, and it was 75 basis points, which the market anticipated was most likely. And then once Powell starts talking, we shoot up. And I think that's maybe the third FOMC in a row where 230 marks a bull move. But really what it was bulls holding support. So we have the high and the low of the reaction, and then we double bottomed and shot up. And at that moment, it's bulls in complete control, and that started the short squeeze. And we then had instances of just complete bull control. I was watching QQQ on the 1 minute time frame, and I was watching a potential head and shoulders, and this was just clear to me. This made clear to me that bulls are doing a great job of defending defense. So defending support. I was watching for this to be a potential head and shoulders to lead to some consolidation. 33.05.33 is support. We hold it by 9 pennies. We then bounce and we hold it again, and then we hold it again, and then we see continuation. If you cannot take out support, bears give up and cover that short, and bulls keep buying off support, and that just propels the short squeeze further. So the bulls did a really good job of defending support. Here again, 306.22, double bottom by 1 penny into continuation. We did see some profit taking into the end of the day. We do have Facebook earnings reactions now. So hourly consolidation is underway on our futures charts. But again, we have a lot of space to be looking for an hourly high or low. So the big question over the next 2 days, with again, still a handful of earnings reactions. We got to see Apple's earnings reaction, and we got to see the GDP reaction. I think the market has done a pretty good job of preparing, or I should say, I think the Fed's done, or whoever has done a pretty good job of preparing the market for the potential of negative and recession, and that word's being thrown around a lot. So we'll have to see what the reaction is, but it's all about, for me, the NASDAQ, because we have a double top. And if we head into the weekend with that double top, we're going to be a little bit iffy. But if we head into the weekend with all of our major sectors up at new highs of the bounce, that's, again, a lot of confidence. And every leg up that we see from here increases probabilities that a bottom is in for me, but we're going to have to confirm a weekly trend change eventually for me to have any conviction in that. But in the short term, I'm just keeping it simple, and I am bullish as long as we keep setting daily higher lows. And so we have new benchmark levels, and that's 389.95 on SPY. Next resistance on SPY after 402.88. We're looking up at 409.97, but it's really 415.64 that's the big one, because that is our weekly resistance. And again, I'm just viewing this as all the same bounce, where anything under 415.64 will be a weekly lower high, but this is also a big enough weekly bounce where we're creating the space for, even if we do reject, there'll be a potential weekly inverse head and shoulders attempt, which is what the healthcare sector has already done, which we'll look at in just a moment. But in terms of space that the bulls have to work with, we've got about 9% where we can drop and still hold that fear low. That's not a ton. Again, that's why I need a confirmed weekly trend change if I'm going to say, looks like our bottom's in for now, but still in a weekly downtrend. Not going to lose sight of that. So I'm aware of that bigger picture, but I am bullish as long as we're in a daily uptrend, because we can't set the weekly lower high if we keep daily higher lows going. So the NASDAQ with the double top is going to be key for the rest of the week. For QQQ, that level is 308.55. Man, we rejected by 1 penny. I did not have my eye on that close enough for the end of the day bear play. And so we're scouting an hourly higher low. Meta earnings reaction, bearish, but not hugely bearish. We're back to where we were trading yesterday. Keeping an eye on the fear lows. We have a base of support, 154s, 155s. So it is a bearish reaction. There were some other bullish reactions out there. Ford had a big bull reaction. So you can see the S&P 500 is not really reacting bearish to Meta earnings, just slightly under where we closed. So all about NASDAQ resistance. Semiconductor bulls confirm the daily uptrend, or confirm continuation. So new daily higher low, new benchmark level, 221.30. Simple statement of 221.30 is support. The bulls have their control. Resistance after 233.87 is 240.72. And the weekly level of 249.12 is the most important resistance from here. Tesla, daily higher low set. Hourly oversold conditions, they did get extreme yesterday, but it did mark our daily higher low, which is a good sign for the bulls. One note, crypto has been leading these moves in both directions. So crypto bottomed, hit a fear bottom before the stock market did. Crypto started daily consolidation this past week before the stock market did. And crypto had a bullish reaction to the FOMC right away, while SPY and QQQ did that sideways range first. So just a quick example. Bitcoin, this was the initial reaction, bull, and then some slow grind up, while SPY went bull and then bear and then sideways. So I am absolutely paying attention that multiple times the last month in both directions, crypto has been leading. And I don't think the broader market is following crypto, but I do think that there are clues to be had there. Just one other little piece of the puzzle, just like the VIX, just like the dollar, just like the 10-year. I think crypto is a key aspect in terms of just another little puzzle piece to be paying attention to. And so I'm going to be watching to see if crypto names head to higher highs as well. So Tesla daily higher low is set, 768.79. And this is the kind of scenario where the fundamentals make things tricky, because Tesla never confirmed, or at least QQQ, a lot of these names never confirmed an hourly trend change back to the bulls until the FOMC reaction. So it's when you have those fundamental reactions that the trends that are usually our guides are not as helpful and things aren't as clear. So normally we would expect if there were no fundamental reactions, QQQ would bounce a bit and then it would change the hourly trend into this move. Whereas because of the fundamental reaction last night, a bit of a runaway train, which definitely contributed to the short squeeze factor today. So Tesla's got the daily uptrend going still. Short-term support, we can use the FOMC reaction low on all names for short-term support, 806.45 there. And we're just looking back at the high, 842.36. We're either going to break that level into continuation of the uptrend, or we're going to reject and tighten up, which would be essentially a 4-hour equilibrium. So if we are red tomorrow, some names will be forming 4-hour tightening ranges to be keeping an eye on, and NVDA is another one. We know SMH broke resistance already, NVDA a little bit weaker. So if we have red tomorrow, the double top in the NASDAQ will remain, and 4-hour lower highs will form on some of these names like Tesla and NVDA. So keeping an eye out for that possibility, which again is why the NASDAQ double top is so key for me in the short term. Healthcare sector, our lead bull out of our major sectors, is in a weekly uptrend now. That's very notable. Our lead bull is leading. We want to see the bulls break 133.49 to have confidence in continuation to take out both of those levels. But that is a clear uptrend, and the utility sector is going to try and follow suit. 72 is resistance, so bulls have another 2% to go. But it's the same setup as far as the weekly is concerned. And the healthcare sector now on the monthly chart, I don't have much clarity at all on that monthly chart. So we're going to stick to the weekly. Weekly and daily uptrend. And a lot of space for a daily high or low, anything above 127.82. Financial sector is one name that still has to see continuation to join. We have a double top here as well. So 33.16, double top to the penny. If we were to reject and break 32.42, that would definitely be a red flag for bulls. But if we hold 32.42, we remain within striking distance of that double top. And so again, if it's going to be confidence and full steam ahead for the bulls, NASDAQ and XLF have to break resistance to join semiconductors, S&P 500, solar sector, which we'll look at here in just a second, IWM. So IWM, daily bull flag confirmed. We certainly saw that was very healthy consolidation the last few days, no red flags. Resistance after 184.25 is up at 187.07. New benchmark level for bull control. And the weekly 190.44 resistance is the most important level to us from here. Biotech sector, still a potential daily head and shoulders, but bulls defended support today. I shorted it first thing, and I was looking for an hourly lower high compared to 83. I talked about this in the video yesterday, I think, where I was looking for that bear entry first thing, and I took it because I could recognize bearish weakness, bearish correlation in the first, literally only took like 10 seconds to recognize it because the bell rang and QQQ popped up, and XBI, after the bell rang, was hitting the low of the day while QQQ was hitting the high of the day. That shows me a bearish correlation. So I jumped into a short first thing, LABD, and then once we hit 5-minute oversold conditions, which was very quick, I took half of that position off, and I then took the second half off. I forget where, but the reason I took the second half of the position off, the bears did exactly what I wanted them to by failing 83 and breaking 81.23, but I was looking around at the rest of the market. There was no weakness anywhere. So I took that short off. Normally I would just leave that second half of that short with a break-even stop and let it play out. But I looked around at the market and saw bears were not present on any other sector. And so I did not trust that the biotech bears can get any follow-through if that is the case. So it was a very small win to start the day, maybe a, 40% day maker or something like that. So good to recognize the shift in the other direction. But again, the thing to improve upon today for me was more aggressively playing the setup for that short squeeze. And again, in hindsight, but the time to do it would have been either bottom fishing the double bottom but longing the resistance break and then just putting a stop under the double bottom at that point, which still would have been a decent amount of risk. It's always easier in hindsight, huh? So, again, just keep it simple. I am bullish as long as the daily uptrends are intact. I'm aware we're in weekly downtrends, so I'm not to the moon bullish. I'm definitely watching on a daily basis for any signs that we may be losing daily uptrends, but definitely a vote of confidence for bulls today. I know a lot of bears were, and this is where social media helps, because I knew bears were not positioned well because so many people on social media last week, just wait for the FOMC, party's about to be over. And so when you get the bullish reaction to the FOMC, well, now what for the bears in the short term? I know bigger picture, still a whole lot of fundamental bears with reasons for sticking to their guns, but the daily uptrend and the daily bull flags, definitely notable. So NASDAQ and XLF still have to break resistance. A red day in the stock market tomorrow will definitely have me pause a little and say, okay, this can play out either way. If the NASDAQ can't break the double top, it is still possible to set weekly lower highs from here in some places. So for the biotech sector, they need a break of 86.41. And I will still be watching for the potential of a daily lower high, but only if the NASDAQ fails resistance and pulls back. But bulls did a good job with defending daily support. So we are still in a daily uptrend here, and the weekly stair-step pattern does remain intact. Solar sector, big breakout today. Earnings reaction pre-market led to a gap up open. FOMC reaction followed through. This is a long tightening range breaking bull. Essentially just viewing this as a weekly equilibrium that has been tightening up for the last 5 months. And we just broke 77.01. And if we break 78.82, it will show conviction with follow through. But look at the monthly here. We're leveling out, shifting momentum. We had a falling wedge back here. Falling wedge. Well, we got a channel. This resistance is worth watching. So if we don't break 78.82, it will be notable. But bigger picture, look at the 6-month chart. Is that a 6-month higher low forming? And are we about to trade within the range that we are establishing over the next couple of years? Maybe. Maybe we bounce for 6 months, set a lower high, pull back for 6 months. There is a scenario where market volatility could greatly shrink. If SPY, this is the 2-month time frame. Low of the CVID dump, all-time highs. If we get bull follow-through, if we get weekly trend changes, maybe we bounce and set a 2-month lower high. Maybe we then pull back. Next thing you know, we're into Q1 2023 or later. And again, I'm always watching for those equilibriums once you see significant volatility in both directions. I would be much more confident in the equilibrium if we had pulled back more significantly in retracement here. Retracement was only about 45%. So we know we're much more confident in those equilibriums when the retracement is more like 50% plus. But again, that's making the assumption that a 2-month higher low is being set, which we can't do yet. We don't have enough information for that. Change the weekly trend, and then it will be a lot more convincing. So solar sector, bull break, but definitely want to follow through and take out that second level. Daily higher lows will be our guide here as well. The dollar, clear wall of resistance and clear base of support. So we are just range bound, chopping around here, and nothing changes on this chart until one of these two levels breaks. If it's a bear break, we look to weekly EMA 12. If it's a bull break, a weekly bull flag is still on the table. We're covering the metals. So not officially a daily trend change, but gold is closing above daily EMA 12 for the first time in 6 weeks. So we've got our low, high, higher low is 1711, and bulls need to break 1740 more convincingly for a clear daily uptrend. We will then zoom out and know that a weekly lower high is the most likely scenario, and we'll be watching our retracement size to determine probabilities. Is this a weekly bear flag? Is it a big enough bounce to create space for a weekly trend change attempt eventually? Look at the last time around we had the weekly bounce. What did that end up being? A bear flag. It was in the gray zone here where the retracement was about 45%, so that's more than the 382. That's our bear flag guide. It's less than the 50%. That's our equilibrium guide. But we're watching the weekly retracement, knowing that we do need follow through because that at the moment that's a double top. So we don't officially have a daily uptrend at the moment, but bulls are trying. Silver is more convincing. I want to see silver bulls break 1941 for some follow through, but the weekly bounce is more convincingly underway. Just barely. Same deal. We're going to watch weekly EMA 12 resistance. What's the retracement? How much follow through do we get? And metal bulls definitely want to see the dollar break that support and continue the weekly consolidation so the inverse metals can continue the weekly bounce. Miners had a good day today, I assume, with both the market and metals going up. Still daily EMA 12 though. If we do not break 2654, the bears keep short-term control of the miners. One thing to be watching with comparisons, XAU, XAG, which shows relative strength of gold versus silver. If you go back and look at the periods in time when metals were strong, this chart shows weakness. And the way that I view it is risk on, risk off. So if you have confidence in metals, are you going to put your money in gold or silver? A lot of people put their money in silver because it goes up more and it drops down more. So that means there's more risk and reward in both directions. And so if I'm confident bearish, I'm shorting silver because there's more gains to be had. If I'm confident bullish, I'm longing silver. So this chart shows us that gold has been gaining strength against silver significantly since mid-April. What happened in mid-April for the metals, I forget. We topped out. That was the top. So what does that tell us? That tells us the entire time we've been pulling back, silver has been dropping harder than gold. So now we need to see silver leading. If we're going to have bull confidence, we need to see silver going up. So that means this XAU, XAG chart needs to go down to show us silver gaining strength against gold. And if we drop down and break 89.65, let's call it 89.63 here, that will be the strongest silver has been comparative to gold in over a month. And that will stand out to us, or in just about a month. So this is a rising wedge-like pattern because the bull breaks started lacking follow-through. And so what we need to see is that level break. And again, silver just consistently gain against gold. We want to see a long-term top set. When's the last time the long-term top was set? March 2020. March 2020 was that big 5-month move up, blue sky breakout for gold. And again, silver led the way up. Oil, keeping that daily inverse head and shoulders alive. It was an ugly day yesterday, but still possible. Got to break 99 and then 101. So staying within striking distance of resistance. If we break 93, bulls fail, but they're holding that level for now. Natural gas, daily consolidation following through after that perfect top fish as far as being as extended as you can possibly be into a key resistance test. But we are looking for a daily higher low. And you can see first hourly oversold conditions were front run here, meaning we didn't even get to it. Bulls started buying before that RSI even dropped down to 30. They were buying at 33. So we need to see trend changes back to bulls. We need a 4-hour trend change back to bulls for a daily higher low to be shaping up. Certainly plenty of space for it. Could this be a cup and handle? It can at this point. If this remains a daily bull flag, I mean, this is your textbook cup and handle setup with inability to break resistance, and then a bull flag. But the most important aspect is the bull flag. So bulls need to set this daily high or low sooner rather than later. All right. Hope you had a good day. Burden on bears. Bears have to prove to me that weekly consolidation is shaping up. Bears have to prove to me that we're losing daily uptrends. We've got a double top to watch on XLF and QQQ. If both of those levels break before the weekend, we've got full steam ahead for bull confidence. And I think that would make some bears readjust their thinking. But you're going to have bears, even if we do go 10% higher from here in the market, you'll have people bearish the entire way, talking bear rallies. Stick to the trends, just the daily higher lows, nice and clear, and do good things. I'm out of content, so I'm going to recycle something, but I don't know what.